Hello everyone, welcome to the next video. So in this one, we're going to be applying everything that we know to the charts. So what this means is actually involving the fundamentals with the technicals. Now, of course, until now, you know all the knowledge, that I've been teaching and everything, you've been taking notes. But when it comes to the actual charts and, taking action on all the knowledge that you know, how are you actually going to do this? So we're going to take a look at one of my case studies on Instagram. You can have a look. This is the USD CAD trade. I hit a 1 to 63 risk to reward on that. So we're going to be looking at this because it's one of the perfect examples that I have where you combine both technicals and fundamentals and use it for a long-term hold, but using the lower time frame to actually enter on and get obviously low pip stop loss. So the first step, first time before you even get into any technicals or anything, you've got to understand your directional bias. So in terms of fundamentals for this trade, we were completely convinced that our bias was bearish. So what you've got to do is look at both economies. So the first one, the US. The first point was that they had very inflationary conditions in the US economy, and we expected further selling of the USD. As you understand, the more inflationary conditions there are, the more depreciation of that domestic currency. And next, US was experiencing a rise in COVID cases, therefore economic activity was slowed. Of course, businesses could not function as normal, and of course, consumers will not be spending as much. There were also 0% interest rates, which means you're in very inflationary conditions, as we already explained. People want to, the banks want people to increase economic stimulation by obviously taking loans and everything like that. But this is what happens whenever you're in a crisis. Then the CPI data presented higher inflation, and the GDP rate growth was slightly lower than CAD. And then for the CAD, the Canadian economy. So you've got the reopening of global economies, therefore oil demand increased. Of course, with the reopening of global economies, that means there's a higher demand for oil because it's one of the most used commodities throughout all types of industries. Therefore, as demand increases, supply reduces, and therefore prices of that oil increases. Obviously, there's, as we've explored in the previous videos, there's a direct correlation to the export market of Canada. Now, what that means is if Canada is exporting more than it's importing, it's in a trade surplus. Therefore, it's positive for the economy. Here as well, you had near 0% interest rates for the same reason as the US. However, COVID was being dealt with much better than the US. More businesses were able to stay active, less lockdowns as well because they had prepared in advance. Then you've got the inflationary data from CPI and PPI. Of course, it was high levels of inflation, which is what you expect around this time, because of course, with the quantitative easing program as well, you're going to get more money supply into the market, therefore higher inflationary data. However, it wasn't to the level of the US. And lastly, what we looked at was the GDP rate growth, and this in comparison to the US was higher as well. So in conclusion, from all the fundamentals, we can see that as we expected the US dollar to decrease, we expected the Canadian dollar to increase. Therefore, USD CAD looks for sales. So what's next? The second step is actually looking on the higher time frame. And for me, this obviously we can look at the daily, and that's what I always do at first. But what was of interest was actually getting the trade and getting into the market. So for this example, we looked at the 1 hour chart. Obviously, it's a bit blurry because I took a screenshot from the Instagram. But let's explore what happened in this technical analysis. So as price was continuing downwards, it mitigated this area right here. Let me just use a pen. So it mitigated this area right here, confirming more sell side. Therefore, as price continued downwards, it leave occasional areas of liquidity. However, price continued to go downwards, for example, even leaving market gaps. And as I said in the technical section, price always aims to fill these market gaps. Eventually, we got to certain areas of interest. Price continued downwards. But then as soon as we start to see price retrace a bit, which is what, of course, we always expect on a weekly cycle, Price came back down, clear order block over here. It retraced back down to mitigate this order block. So confirmation of buys. Now we had not completely broken this structure right here, but as soon as we did, price went back up. But rather than completely continuing to the upside, we had the conviction that USD CAD fundamentally was selling, right? So we price returned to this breaker block right here, this one. But as it did so, it also took out or swept out the equal highs at the top over here. Of course, you had the retail trend line as well that we also took stop losses from. Therefore, what we can call this is a clear FU candle. As price returned back down, breaking structure to the downside, retrace back up. So this could have been an area for potential sells. However, we were introduced to the market around this point. Then we got clear confirmation of even more sells as we took sell side liquidity over here and continued our downward trend. And then as we returned back to our price, of course, we had multiple points of interest. Perhaps if you had entered on this one or this one, for example, you would have incurred a loss. However, that's why risk management is so key. As we got to this area, we were hoping at first for this candle right here, but we also identified that we were filling this liquidity void. Now, what happens at liquidity voids? Of course, that's an example of some type of liquidity, but what we must aim for is as soon as we get to this area of interest, we've got to go down on the lower time frame for a confirmation trade. If you remember, confirmation trades, of course, is waiting on the lower time frame to see what happens and then entering. A risk trade would have been entering here, for example, stop loss there. But you look at that risk to reward and you see, and you still don't know if there's confirmation that you're selling yet. And you see it's a potential 1 to 4 rather than what we caught, which was a 1 to 63. So moving on. Now we're back onto the lower time frame. So we reached this area of the liquidity void. As we were doing so, we were also looking at price action in terms of time and price. So what that meant is obviously this is our third step in our checklist. So we had the Asian range right here identified. That was between 12 a.m. to 5 a.m. in the morning, UK time. Then between here, if you guys remember, between 8 to 10 a.m. is the important London reversal that we look for. And this is the exact confirmation that we got. As we reached this our liquidity void, we were waiting at first for our order block at the top. If you look back on previous lesson of the previous slide over here, we were waiting for this point of interest right here. But of course, price does not always mitigate areas perfectly. Sometimes it goes into a void, and then that's when it starts rejecting off. So we had this Asian range. So tick, that's part of our daily cycle that we look for. Then we also had the London reversal into an area of interest. Tick, that's our second point. Then we had our break of structure down. Got that break of structure right there. So that's another point of confirmation. Then what we were looking for was to get an entry on New York retracement. And this, as you know, is between 12 till about 2:30 p.m. UK time. And this is exactly what we got. We had identified this larger order block, but within this larger 15-minute candle, we had identified this 5-minute refined point of interest, which is, it looked like this. And then, of course, you've got whatever it may be. Then the entry was pretty clear. Risk management on point, risk 1% on the trade. If it's on my personal account, if it's on the funded accounts, and of course, I aim for a bit lower than that in terms of risk percentage. But yeah, guys, in terms of TPs, obviously we saw this void right here to be filled. We had liquid equal lows at the bottom right here. So of course we had areas of TP, but in terms of our final TP, we were aiming for this sell side liquidity. Now, because we're in bearish structure and we know we're in a downtrend, of course we can aim for even lower than that. However, the issue with that is this is a secure sell. So you know for a fact, if you're in a bearish trend, you're going to be aiming for this as a take profit, right? But if you keep aiming even lower, you may get to a point of interest and fundamentals might change at that time as well, where price may ping off and just come straight back. And this isn't, we'd much rather take profits right there and take money off the table and just put it in our pocket rather than just waiting and waiting. Other option as well is obviously to take some partials there. So for example, I could have taken 60% or 80% because we know it's our main take profit, and then leave the rest running to see how long it goes for. Now, when looking back at this trade I believe could have went up to a 128 or something like that. I dragged it all the way to the bottom, but that's in hindsight. Obviously, looking back, you can see, oh, I could have held it till there. But when you're actually in the market, when you're in this much profit and you've got a 1 to 63, trust me, a 1 to 63 is more than enough. And especially when you see your account grow, then you just want to take some profits from that. Yeah, guys, that's exactly the steps that I use to apply fundamentals to technicals. It's a simple two-step process. Understand fundamentals first to get your bias, then get into technicals. If you're entering on a confirmation trade, then of course you're going to be able to get risk rewards like this. If you're entering on limit trades and risk trades, as I call it, you're going to be limited on the amount of risk reward that you're going to be able to obtain. But at the end of the day, profit is profit. You can never complain. So yeah, that's all for today. I hope this all made sense and kind of just wrapped up the course a bit. In conclusion, yeah, guys, I'll see you in the next video.